Donald Trump's latest stance on crypto could change everything for XRP, and if you're not paying attention, you might miss out on one of the biggest financial shifts in history. For years, regulatory uncertainty has kept institutional money on the sidelines, but that could all be about to change. Trump's pro-crypto agenda signals a massive shift in policy, one that could bring trillions of dollars into the market. If he returns to office or continues influencing financial policies, XRP could finally get the regulatory clarity it needs, and once that happens, the floodgates of institutional investment could open. Wall Street, hedge funds, and banks have been waiting for the green light to go all in, and Trump's new crypto-friendly approach might be the moment they've been waiting for. The question is, what does this mean for XRP holders? Could this be the key event that sends XRP skyrocketing? Let's break down exactly how Trump's crypto agenda could trigger a $1 trillion surge for XRP. Donald Trump's stance on crypto has taken a dramatic turn, and this shift could change the entire future of digital assets, including XRP. In the past, Trump was skeptical about cryptocurrencies, even calling them a scam and questioning their legitimacy. But now everything is different. He has publicly stated that the US must embrace blockchain technology and digital assets to remain competitive on the global stage. This is a complete reversal from his previous position, and it's happening at a time when regulation and institutional adoption are becoming the biggest factors driving crypto markets. So why the sudden change? The financial world is evolving fast. Countries like China, the UAE, and the European Union are advancing in blockchain development, and the US risks falling behind. Trump and his advisors now recognize that digital assets, including XRP, could play a major role in the next phase of the financial system. If the US fails to embrace crypto, it risks losing control over global financial dominance. Trump's influence over economic policies could mean that the harsh, unclear regulations that have held XRP back could soon be eliminated. Instead of attacking digital assets, a pro-crypto administration could create policies that promote adoption, protect innovation, and allow institutions to invest in XRP without fear of legal repercussions. This isn't just about politics, it's about the future of finance. With blockchain adoption accelerating worldwide, Trump's shift could set off a chain reaction that forces the US financial system to integrate digital assets faster than ever before. And when that happens, the impact on XRP could be massive. But there's one major factor that could push XRP's price even higher: regulatory clarity. If Trump's pro-crypto policies lead to a clear ruling on XRP status, we could see an explosion in demand almost overnight. Let's take a look at how this could unfold. For years, regulatory uncertainty has been the biggest roadblock for XRP. The ongoing lawsuit with the SEC has kept institutional investors away, forcing many to wait on the sidelines until there's a clear legal ruling. But now, with Trump's pro-crypto stance gaining traction, there's growing speculation that XRP could finally get the regulatory clarity it needs, and that could change everything. If Trump or a crypto-friendly administration takes office, the SEC's attack on Ripple could come to an end. The case against Ripple has been dragged out for years, preventing full-scale adoption, but a policy shift could force regulators to stop targeting digital assets and instead focus on establishing a framework that allows crypto to thrive. If this happens, XRP could be officially recognized as a bridge currency rather than a security. This would open the door for major banks, hedge funds, and financial institutions to start accumulating XRP without fear of legal risks. Regulatory clarity isn't just about legality, it's about unlocking trillions of dollars in potential investments. Right now, most large institutions can't legally hold or trade XRP at scale because of the uncertainty surrounding the lawsuit. But once the legal barriers are removed, we could see a flood of money rushing into XRP, pushing its price to new highs. This isn't speculation. We've already seen how regulatory clarity impacts market growth. When Bitcoin ETFs were approved, institutional demand soared, pushing Bitcoin's price to new highs. If XRP gets a similar green light, we could witness an even bigger surge as banks and financial firms rush to integrate XRP into their payment networks. But here's where things get even more interesting. Wall Street is already paying attention. Even with the SEC lawsuit still ongoing, financial giants like BlackRock and Vanguard are reportedly positioning themselves for the next big wave in crypto. If regulatory clarity arrives, these institutions won't wait. They'll move fast. Let's take a closer look at how institutional investors are preparing for a massive XRP accumulation. Wall Street is always ahead of the game. While retail investors debate whether XRP will rise or fall, major financial institutions are already making their moves, quietly preparing for large-scale accumulation. BlackRock, Vanguard, and other asset management giants don't invest based on hype. They invest based on strategic positioning, long-term potential, and regulatory clarity. And right now, XRP is becoming one of the most closely watched assets in the financial world. Here's why institutions are suddenly interested: liquidity, utility, and regulation. Unlike many other cryptocurrencies, XRP was designed for large-scale transactions, making it ideal for institutional use. Its ability to move funds across borders instantly and at near no cost solves one of the biggest financial problems banks face today. If Trump's policies provide the clarity that institutions need, we could see Wall Street firms entering the XRP market in ways we've never seen before. But there's more. The supply and demand dynamics are setting up the perfect storm for an XRP supply shock. Institutions don't just buy and sell like retail traders, they accumulate and hold. When major banks and hedge funds start securing XRP for liquidity and cross-border payments, the available supply on the open market will shrink. And with a fixed supply of 100 billion XRP, a sudden surge in demand could send prices. We've seen this before. When institutional demand for Bitcoin ETFs skyrocketed, Bitcoin's price surged past $60,000. XRP could be next. With regulatory clarity and institutional backing, XRP could finally see the kind of explosive growth that long-term investors have been waiting for. But there's one more piece to this puzzle: central bank digital currencies, CBDCs. Ripple has already partnered with central banks across the world, and if a pro-crypto administration accelerates CBDC adoption, XRP's role in global finance could expand faster than anyone expects. Let's dive into how Ripple's growing involvement with CBDCs could be the final catalyst that changes XRP's future forever. Central bank digital currencies, CBDCs, are no longer a theory. They are the future of money. Governments worldwide are racing to develop digital versions of their national currencies, and Ripple is positioning XRP as the bridge asset that connects them all. If a pro-crypto administration takes control in the US, Ripple's role in CBDC development could expand massively, putting XRP at the center of a new global financial system. Why does this matter? CBDCs need interoperability. Each country is developing its own digital currency, but these systems will operate independently. Without a common bridge, international transactions will still be slow, expensive, and inefficient. That's exactly where XRP comes in. Ripple's technology allows for instant cross-border settlements between CBDCs and traditional financial systems, making it the ideal solution for global payments. Ripple has already made significant progress in this space. More than 20 central banks are in discussions with Ripple, and some are actively testing XRP for real-time settlements. Countries like the UK,